Hey, welcome to the daily stock review. Today we're going over Healius Limited. The goal of this channel is to uncover the world's best stocks that have 100x potential. An investor on the journey and just sharing the lessons along the way. So today we'll go straight in and do the stock analysis. In future videos, we'll go through YouTube comment questions and answers and review some goals. My investing process is 5 steps. I'll show you where I found this stock and then we'll do a 5-minute check of if this business is worth looking at further, which saves us a lot of time wasting it on investments that aren't worth looking at. I've learned from these guys. They did pretty well for themselves over a few decades, so we want to try and follow in their footsteps by looking at the common things that these guys did and following that kind of investment rationale. All right, let's jump straight in. So how to come across it, I believe I was looking around and I follow a couple of other institutional investors, either on LinkedIn, Twitter, and things like that. So I came across this business, saw it put up, and just marked it to come and have a look at in the future. So all I do is for this quick 5-minute review is jump straight in, type in Healius annual reports. I usually get the investor page like we've got here. And then let's just view latest report. So annual report for 2025. Now these are usually got a whole bunch of fluff. I believe this is a business based in Australia, potentially. At this stage, for this first 5-minute check, it doesn't really matter, but it just means this report will be laid out differently. All right. So what I'm looking for is the financial statements. So on the nice layout of the 10Ks in the US, their annual reports, makes it a lot easier to read. You can see that they start trying to break down different parts of the financial statements, and this can be, I guess, trying to pick out the nice parts of it to talk about. Some businesses will talk about the hard times, but that's very rare. Director's report. Don't care. Aha, here we go. All right. Show. I want to look at the income statement first, aka the profit and loss, aka P&L. So looking at revenue, this is in millions, so 1.2, it's grown up to 1.3 billion. Yep. 1.2 to 1.3 billion. Employee benefits expense. What? That's interesting. So I'd want to be having a look at that. If we're looking in the business further, we might look at it now. We'll just see. Consumables, repairs, maintenance, blah, blah, blah. Termination, other costs. Impairment of goodwill. Ooh. That's a big hit. Loss before interest, loss before tax. Loss for the year from continuing operations. Loss for the year. Oh, profit for the year from discontinued. Alright, so they made a loss of 645 million. And then they made a loss of 151 million. Now, that usually would be a positive number. Brackets means it's negative. And obviously, because it's saying it's a loss, it's usually put under as net income. So let's go and have a look a little bit further. We're not just writing the business off from that. We want to have a look at the assets of the business. So how healthy is the business? And what I'm looking for, has the business mastered its customer is one key thing. You can usually see that in terms of, is the business healthy? Has it been able to position itself? Is it making a good income? Next is I want to see if there's a moat around the business. So a little bit tricky to see from the income statement, with the various closing down of parts of the business and things like that, as well as employee benefits. I'll have to check that one out. And then also we want to see if management's been allocating the money rationally. So that'll be pretty important now, as considering it sounds like it's gone through a bit of a restructure. So we need to try and check that out. Current assets, total current is 251 versus 300, so it's decreasing the base. Total assets is decreased from around 3 billion to 1.7. Total current liabilities is double what the current assets is, and total liabilities is 1.9 to 1.1, so that's decreased as well. And where has it decreased? Interest-bearing liabilities. Looks like it's decreased. They've lowered their lease liabilities, so whether that be selling parts of their business off and different things. And we can see their lease liabilities has decreased. Provisions and payables has also decreased. So the consolidated statements does not include the financial statements of the divested Loomis imaging business. So divested just means they sold that portion off. They've got rid of it. So it might have been part of a business that was weighing them down, as you can see from this. Changes in equity, it's not really important for our first look. But cash flow is, because it takes away these various items that have been bought, sold, etc. Makes it a bit easier for us to see what's going on. So we'll see if that's the case. Receipts from customers. So their revenue has actually grown, which is good. Payments to suppliers and employees. Yep. Gross cash flows from operating activities. Net cash provided by operating activities. So this is a key number for us. 285, 266. Proceeds from sale of business. Payment for property, plant and equipment. So this is a key one for us. We want to get this number, so net cash provided by operating activities, and take this off it. So what's the number that we're left with? So about 216 and what? 230. So we can see there though that the net, that gives us that figure. So this number minus the property, plant, equipment gives us the free cash flow of the business. And that's an important number because that lets us go, okay, even with that net income showing that it's a loss, that's a paper loss. They've got various parts of the business that have been sold off and non-cash charges that have come in and come out. We want to be able to see where it's actually gone during the year. So that's a pretty significant amount of cash for a business that's making that. So it's a little bit over 10% net at the end of the day, considering their revenues increasing as well. Investment activities, so proceeds from sale of business, 795, that comes out versus 63. Finance costs, so these are where the repayment of borrowings, dividends paid. Whew. So just looking at this, we can see that they've sold a part of the business off. They got $795 million for it. What have they decided to do with that money? So changes between these two, they've got here, and they've repayment of borrowings. So they've paid off $515 million in terms of other borrowings and things like that. And then they've paid 299.9, so effectively 300 million in dividends to shareholders. So they didn't invest that money in growth. Looks like they've downsized a portion of the business and tried to keep it lean and mean. So that may have been quite a rational decision to make. Now, if this business had got that and then decided to buy a whole bunch of equipment and things like that that don't actually make the business any more money, or trying to diversify the business into things that they're not actually good at making, if it's not the core product of the business, it can always be a dangerous move to try and diversify, because it splits the management teams or then the CEO's attention. They stop focusing on the main thing, focus on something else, and then by taking their eye off the ball, the core business can deteriorate, which is a great lesson that happened before Warren Buffett invested in Coca-Cola back in the 80s. So that's pretty cool. So what comes out at the end of the day? Boom, boom, boom. Net cash used in financing. Yeah, so they spent a lot of money, but they got a lot of money and paid it off and used it to pay off that debt and then pay off shareholders, reward them. Net decrease in cash at the end of the year. Pretty small amount, but they've maintained it. So business that's making around 10 to 15% free cash flow from their net revenue, with the revenue of the business increasing. For a bit more of a deeper dive, I'd be looking back further at this business to see what's going on. What makes this one even more interesting is because that earnings figure was a loss. Where is it? From the income statement. Because this business has put down effectively a paper loss, impairment of goodwill and things like that, that is what gets counted here in this earnings. So a lot of investors just look at how much has the company earned versus how much is this thing creating cash flow. And so over the last 5 years, the stock prices dropped and dropped and dropped and dropped and dropped to 92%. Now, I'm actually going to have a closer look at this business and do a bit more of a deeper dive on it, because this looks like everything that could be the makings of a great value play. Now, is it going to be the greatest business from an 100x? Probably not. Realistically, it's dropped 92% over that last 5-year period. But since those results came out, the stock price has continued to decrease. And what I'm seeing on those financials isn't a company that's going to bankruptcy, which is the usual trend here. It actually looks really healthy in terms of the balance sheet. It's got rid of some debt, and it has improved its financial position. It's still making more revenue, even with selling off that divested business. And it's paid its shareholders $300 million out of that as well. So it looks like the market hasn't actually caught up with what this business is doing, and what there's a gap there. So it'll be interesting to see. It's being priced at about 35 cents. It'll be interesting to see what the actual value of the business is, knowing that that free cash flow is a lot more than negative net income. All right, but otherwise, that's a good one, and that'll be interesting to go through. So you can see why a couple of these investors that I follow, it's great to keep an eye on other guys that are willing to let you know what they're investing in and let you know what stocks they're keeping an eye on. Now, these guys have got great track records. You can do the same with your own guys that you're following, and have a look at what they're doing, follow along, and then have a look at the businesses that they mention as well. Now, do they have a conflict of interest? Yeah. If they're saying what stocks they're involved in, just like I'm saying and reviewing these stocks at the moment, yeah, there's definitely a portion of people that try and take advantage of you. So be mindful of that. Have a look at the stock. Do your own homework on them, and don't just jump straight into a stock. You can see from that it would take me 5 minutes to quickly look at those figures in those financials before even deciding to buy or have a look into the business further. Now, that was only the 5-minute check. Part of that process is where to look. We do the 5-minute check, and if the business is terrible and we just don't want to have a look at it, we throw it away. We don't waste any more time with it. If now I'm at the stage where I want to do my homework, so I'll be reading up on more of that business, and I'll record that so you guys can have that as well. Then we get to the stage where we've done enough homework. Is the business worth us looking at it further? If yes, we value it, and we have a look at what that growth kind of looks like, and we want that free cash flow figure as well. And then with that valuation, we have a look, is this a business to continue to follow because the price isn't right at the moment, or is it a good time and we should jump on board? And then have a look at how that compares with the rest of the stocks that we own. Okay? And out of that big funnel process, great businesses will pop out at the bottom of it. Okay? Now, if you've got any questions for me, feel free to drop them in the comments below. If you'd like to have a specific stock reviewed in the future, or you've got some ideas, feel free to put them down in the comments as well. And subscribe if you'd like to have see the rest of these videos as they come up. I'll be doing a fair few each day so that you guys can have that information and see what I'm getting up to. Otherwise, check out this next video. YouTube reckons you'll like it. Cheers.